Fuel just made a move and it could raise your cost of farming before this market even reacts. And the problem right now is you won't see it on your screen yet. Corn doesn't look out of control, soybeans aren't breaking, and cattle are still holding together. But underneath all of that, something shifted today that ties directly into ethanol demand, and that's where this starts to matter. Because when ethanol demand changes, it doesn't stay contained. It moves into corn, it moves into basis, and eventually moves straight into your margins. So today we're going to break down what just happened, why the market hasn't fully reacted yet, and where the pressure could start building next. Good morning, this is Boots Bushels, your daily look at the markets that feed America. Thank you for spending your morning with me. Let's get into it. Starting with corn, and this is where ethanol story begins to show up, corn prices didn't make a dramatic move today. They stay relatively steady, holding in a range that, at a glance, looks uneventful. But this is one of those moments where the price doesn't tell the full story. Ethanol demand is one of the most consistent demand drivers for corn in the United States. When that piece begins to shift, even slightly, it starts to change how much corn is actually being pulled through the system. It doesn't happen overnight, and it doesn't always show up immediately in futures prices, but it changes expectations, and expectations are what move markets before the numbers ever confirm it. What's happening right now is a shift that could tighten or loosen that demand pipeline depending on how it develops. If ethanol production strengthens, that's supportive for corn. If margins for ethanol plants start getting squeezed, or if fuel demand changes direction, that demand pull weakens. The issue is that the market doesn't always price that in right away. There's a lag between the shift and the reaction, and that lag is where risk starts to build, because once the market realizes it has to adjust to a change that's already been happening quietly, those moves tend to happen quickly and without much warning. That's why today matters more than it looks on the surface. It's not about what corn did today, it's about what might already be changing underneath it. Moving over to soybeans, beans are still holding relatively firm. There's no major breakdown and no major breakout. Soybeans right now are trading more on positioning than on fresh dominant news. They're waiting, and when markets are waiting, they're usually reacting to something developing somewhere else. In this case, that somewhere else is corn and energy. Because if corn demand starts shifting due to ethanol, that doesn't always just stay in corn. It starts to influence planting decisions. And planting decisions are where soybeans come right back into the picture. If fuel costs continue to move higher, and if that starts pulling fertilizer and other inputs along with it, the cost structure for farmers changes. And when the cost structure changes, the decision of what to plant changes with it. That's where soybeans can either gain acres or lose acres, depending on how the economics shake out. So even though beans look quiet today, they're sitting right in the middle of a setup that could become very active and these input pressures continue to build. Wheat is trading on its own story, but it's not completely disconnected either. Wheat markets continue to respond to global supply and weather factors, but they also sit inside the same broader cost environment. When fuel rises, when transportation costs increase, and when global movement in grain becomes more expensive, wheat feels that pressure as well. It might not show up in the same way as it does in corn, but it's still part of the system. And right now, that system is starting to feel pressure from the energy side. Now shifting in livestock, and this is where things get interesting from a margin standpoint, live cattle have been holding together and feeder cattle have remained relatively strong. On the surface, that looks supportive, and it is. But when input costs start to rise, especially fuel and feed, it changes the equation for producers. Feed costs tie directly back to corn. Fuel costs tie directly back into everything from transportation to daily operations. So even if cattle prices are holding, the margin side of that equation can start to tighten quickly if costs begin to move higher. That's the risk building right now. It's not necessarily that cattle markets are breaking down. It's that the cost side of the equation could start moving faster than the price side. And when that happens, profitability gets squeezed. Even in a market that looks stable on the surface, that's something producers need to keep an eye on as this ethanol and fuel story continues to develop. Lean hogs are also navigating that same environment. They're dealing with their own supply and demand factors, but they're not immune to rising input costs either. Feed and fuel remain critical, and any shift in those areas feeds directly into margins. So while hogs may not be the headline today, they're still part of the broader pressure building underneath agriculture as a whole. Now let's talk about energy. because this is where everything connects. Crude oil has made a noticeable move, and when oil moves, it rarely stays contained within the energy sector. It spills into fuel prices, it impacts transportation, and it begins to influence input costs across agriculture. Diesel, fertilizer production, and freight all start reacting to higher energy prices, and while farmers understand that relationship, the key right now isn't the relationship itself, it's the timing. The timing is what matters because the market hasn't fully reacted to this shift yet. And when that reaction comes, it often comes quickly. That's the pressure point we're watching. Not just that energy is moving, but that agriculture hasn't fully priced in what that move could mean. But there's also playing a role in the background. There are areas dealing with volatility, including storm systems that bring the risk of damaging wind, hail, and localized flooding. At the same time, there are regions still watching moisture levels closely with concerns about drought not fully off the table. Weather always adds another layer of uncertainty, and when you combine that with rising input costs and shift demand, it creates a situation where multiple risk factors are building at once. That combination is what makes this moment important. It's not just one factor, it's several factors starting to move together. Now let's get into the broader story driving today, and that's ethanol. Ethanol sits right at the intersection of energy and agriculture. When ethanol demand changes, it affects both sides. It influences corn demand directly, and it ties into fuel markets through blending and usage. So when something shifts in ethanol, it's not isolated. It moves through multiple parts of the system at the same time. What we're seeing right now is a shift that has the potential to change how strong that demand pull is for corn. And depending on how that develops, it could either support the market or start to weaken one of its key pillars. The uncertainty around that is what creates the opportunity and the risk, because markets don't like uncertainty, and when they start to resolve it, they tend to move decisively. That's where we are right now, in the early stages of a shift that hasn't fully been priced in. So the question becomes, what happens next? If ethanol demand strengthens and energy continues to push higher, that could support corn while also raising input costs. That creates a mixed environment where prices may hold or rise, but margins don't necessarily improve. On the other hand, if ethanol demand weakens while costs continue to rise, that's where pressure really starts to build, because then you're dealing with the weaker demand and the higher costs at the same time. That's the scenario the market is trying to figure out right now. And it's why today isn't just another quiet day in the markets, it's a day where something underneath the surface may have started to shift. As we move forward, this is what traders and producers alike will be watching closely. Not just the price action on the screen, but the underlying drivers that influence those prices. Energy, ethanol, input costs, and demand all feeding into the same system. Because when those pieces start to move together, the market doesn't stay quiet for long. Here's what everything was trading there today. Crude oil, 91.28. Corn, 4.53. Oats, 3.59. Wheat, 5.95. Soybeans, 12.14. Lean hogs, 93.57. Feeder cattle, $355.04. Live cattle, $233.28. If you want daily updates on the markets that feed America, make sure you subscribe to Boots and Bushels. We'll be back here again tomorrow.